Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Tuesday, it's the 12th of September, and my name is Russell Shaw. I'm a senior market specialist at FXCM. Just want to draw your attention to my email address, rshaw@fxcm.com, and of course, if you'd like to correspond, that's the email address to use. I'll just go ahead and bring up our disclaimers. I'll start off with the high risk investment warning. And it's a pleasure to have all of you on the webinar this morning. Good morning, James, Kim. Good morning, Howard. All well with me. Trusting you are well too. Thank you very much for joining this morning. All right, let's just bring up the market commentaries disclaimer. I'll keep that on screen as well, just for a few moments. And just finally, the references, market scope and trading view. And we'll start off with the real rate again. This is the real interest rate, and it's moving sort of northeast, you can see. And the reason that we start off with the real rate, it is a key driver of the dollar. And once we kind of understand what's happening with the greenback, we can make inferences about the other forex pairs and even other asset classes. And you can see that the 5-week, the green 5-week is above the orange 10-week, and you can see that the RSI is above 50. And by and large, in my view, this is supportive of the US dollar. And why that's important, yesterday we saw the US dollar pulling back, and the reason that we saw it pulling back is because there was comments out of the Bank of Japan where Governor Ueda said there is going to be data by year end to see if they can reverse policy, to see if they can reverse that negative interest rate policy, if they can tweak that yield curve control. And we saw the yen strengthen, we saw the dollar come down. But we made the specific point that the real yield is still very much moving in that northeast direction. And the reason that we want to see what is happening with the fundamental drivers is because if there's any corrective action, well, that becomes exploitable. That's exactly what we were suggesting yesterday. So I just want to go through to Microsoft Paint, and I want to just drive home the point with a very rough sketch. We want to know the primary trend, I beg your pardon, the primary trend of the underlying. Is it in a bull market or is it in a bear market? Is it moving up? Is it moving down? And then we understand that within the primary trend, there's going to be secondaries. Secondaries are the zigs and the zags, the ebbs and the flows. And the way that would tend to work in an uptrend is you'd get price action. It never moves in a straight line. The primary trend shows that we've moved in a northeasterly direction, but to get there, we're zigzagging, right? And not only are we zigzagging, we can dissect the zigzag into two types of movements. We can do primary trend, I beg your pardon, impulse moves, which move up in the direction of the primary. Okay, so there's the impulse move, and we can differentiate those against the correctives, the corrective moves. Okay, so if we can pinpoint the corrections, and we'll never do that with 100% accuracy, of course, because this is a game based on probabilities. But if we can have an idea of when there is some sort of corrective move, well, that's going to hold us in good stead, because we can try and exploit that. We can try and get in on the dips in the uptrend. So we're looking for dips in the uptrend, and then similarly, okay, if there's a downwards trend, a bear trend, we understand that there's going to be zigzags to the downside as well, right? And then what we're looking for is the rallies. Sorry, let me do that again. We're looking for the rallies, and then we can try and short into the rallies. So that's what we're trying to do: dips in uptrends, rallies in downtrends. If we've got the US 10-year pushing up, that's sort of a fundamental driver. Then we can take a look at the US dollar trend. It's a little difficult because this candle over here there's only a 1 week candle, or one candle, that is giving us the higher trough, higher peak. But nevertheless, in a strict technical definition, this is a higher trough, higher peak. Dollar moving higher. We're above that 30-week exponential moving average. The exponential moving average is moving up. The RSI is above 50. So we seem to have some sort of primary trend indication. And then let's take a look at our daily chart. Here we're taking a look at the zone analysis. We're trying to marry up the daily with the weekly. Well, we do have synchronization here. It is in zone 1, which is our bullish area. That's between the upper blue and the upper red. The RSI is above 50. So we've got synchronization between the daily and the weekly chart. Then we go down to the hourly chart, and this is where it gets interesting. Yesterday we were looking for that dip in the uptrend, okay, because the weekly has a movement up, the daily has an upwards bias, and yesterday we said, well, there is support here. Yesterday there was I think this was S2. What I can do, I'll just double click on the pivots, and what I'll do is I'll just, instead of say show mode today, I'll just go show mode historical, and you can see that yesterday here is the here is S2. Okay, S2. So we were on a support level here. Let's just clean this up. It's a bit messy. So I'll change this from historical to today. I'm just going to go and mute for a moment. I just feel a cough coming. I'm begging your pardon. Sorry about that. Now, we were looking for the bullish cross yesterday on the EMA, and we're looking for the bullish cross on the stochastic. So we've got the bullish cross on the stochastic. Okay, it's moving up towards that upper quintile. It's taking some time for the dollar just to work its way through the support. Okay, but the support has defended the greenback pretty well. And now what we've got is the crossover over here. Okay, so let's just clean this up again. All right, let's extend this. Okay, and you can see that the support level has been defended by the bulls, and now we've got the bullish crossover of the EMAs, the bullish crossover of the stochastic. Importantly, where's the stochastic? Stochastic's heading towards the upper quintile. If we get into that upper quintile and we hold, then we are then prices are at the top of the range. That's bullish. Okay, then there is a good chance that we develop an impulse move off here. It's not a guarantee, it's not 100%. That's why you still use your stop losses, you still use your risk management rules. Very, very important. But it does look as if the dip in the uptrend is potentially is potentially here. I just want to add my watermark back in here. All right, there we go. All right, so that's the US dollar. So if the US dollar is showing some sort of bounce, okay, if we're seeing some sort of bounce in the US dollar, what's the likely prognosis for euro? What's the trajectory that we will expect? Well, if we're getting a bounce in the US dollar, I would suspect euro would have some pressure on it. Let's go ahead and see if that's the case. Okay, so now we'll go through to euro US dollar, and we're going to do a top-down analysis here. And you can see that we've got the, I don't quite, I think if we were, if I had to be very sort of pedantic, very strict, we could probably put in a lower peak here, because this does look like a candle that's got a higher high and a higher low, and then we can put in a lower trough here. And we get that this is very similar to the US dollar, isn't it? It's a mirror image. And then where is this relative to the 30-week exponential moving average? It's below it. And then we want to add a filter of, and what's that filter? Well, what's the direction of the moving average? Well, the moving average is pushing down as well. And then what's happening with the RSI? The RSI is below 50. So there does seem to be some sort of downside pressure here. Well, if that's the case, what's happening with the zones? So we go through to the daily, and we're in zone 3. Now we had a push up yesterday. Well, that's the rally in the downtrend. Okay. Well, if that's the rally in the downtrend, let's go down to the hourly. All right. This one was a little bit more tricky than say the US dollar. Let's take that out, and let's move this as follows. We've just got the cross down. We've got the stochastic moving bearishly, and we're moving towards that lower quintile. If we hit that lower quintile and maintain, then the price actions it's all at the bottom end of the range. That's very bearish. Well, if that's bearish, there is a potential we get that impulse to the downside. So it does look as if it took us about 24 hours or so for the forex market to get moving, but it does look like it's starting to move. Is this a guaranteed move? No, absolutely not. There's no guarantees here. Okay, there could be some news that can move the instruments in a contra direction. Must have a stop loss, must have risk management. So just be aware of that. But it does look as if we're getting that upwards move in the US dollar. If we're getting that upwards move in the dollar, that's the dip in the uptrend. It does look like we're getting pressure on the euro. That's the rally in the downtrend. Okay, so and you can see it sort of like this. Impulse move there, corrective move here, and now we're looking for the next impulse move. So that zigzag that we spoke about, that ebb and flow. Let's go and take a look at a few other pairs. Let's take a look at the cable pairing. Cable is interesting. There was some data that came out this morning. A big one, employment data. Unemployment rate moved from 4.2% to 4.3%. Average earnings are still quite strong. Okay, we were expecting 8.2%, 8.5%, so there's still some upwards pressure on prices there. Let's take a look and see what's happening on pound US dollar. Okay, just bringing that through now. I just want to see if there are any questions. Sorry, Kim, can you just, I'm not quite understanding. Do we need to wait for price to break the P level for the US dollar? Sorry, I'm just going back to US dollar. We'll come back. Break the P level. Yeah, I would get, I would want to see some angle and separation. Yeah, the truth of the matter is, I don't know how high. I don't know what kind of a swing this is going to be. Nobody knows what kind of a swing this is going to be. The idea is to have your entry rules, okay, and then we need to see the stochastic moving to the upper quintile and stick. If it hits the upper quintile and rolls over, no good. We're not going to get the swing that we need. So the central pivot, I think, would be part of, I think we're in the support zone. So I think we've got this big support zone right over here. And so I think that we've got the triggers. Okay, we've got the triggers. Now it's all about the market cooperating with the triggers. Matthijs says the market does as it pleases and traders have no control other than reacting to what the market offers you. Yeah, we're certainly not arguing that the market, we can't control the market. The market's going to do what it's going to do. But within the market's movements, assuming that we have a tested strategy, we're hoping that we have an edge, Matthijs, to take advantage of whatever the market's going to do. So I don't know if we're going to get this swing here, but if we're going to get the swing here, I've got the triggers, okay, and then I'd have the stop loss in, okay. Let's just go back to cable. And cable here, it's a little bit more difficult to read. This is a little bit more difficult to read than euro. We've got price is below the 30-week moving average, but just take note of that 30-week moving average. Remember, we used the 30-week moving average direction as a filter. Well, here it's moving laterally, so we don't have that added comfort of the EMA pointing down. I would suspect that if the US dollar does have some sort of buoyancy to it, I would suspect that would act on the cable pairing. I do see that the RSI is below 50. If we go down to the daily chart, we are in zone 3. Okay, we are in zone 3. And if we go through to the hourly chart, okay, this is a bit more complex. It's not quite as clean as the euro. Again, do you recognize that the EMA, the filter, if we apply that filter, it's not there. What we need is the EMA to cross more bearishly. It's very tight at the moment. I can't tell if this central pivot is acting as support or resistance. I would suspect that if the US dollar is going to carry on bouncing, I think there will be a pressure on the pound, and we can see there is a long selling tail. But truth be told, this is a spinning top. It's a candle of uncertainty. And I would want the EMAs, I'd want the stochastic to drop below 20 again. Not quite as clear as the euro pairing. All right, I just want to take a look at two more. I want to take a look at gold. I want to take a look at the DAX. DAX is quite tricky. In fact, I think gold is tricky as well. So let's just bring up the gold chart, and we'll just do a top-down analysis there. All right, remember, gold moves in the opposite direction to the dollar. If the dollar is moving up, then potential pressure on the precious metal. I am looking at the fact that we've got a lower peak followed by a lower trough. The EMA, again, not giving us much. It's moving laterally. And even the RSI, you know, it is below 50, but it's very close to 50. So gold's holding its own, and the fact of the matter, it's in zone 2. So I think it's in no man's land. It's probably one of those that we want to dare I say, skip. And the only reason I say that is we want to go into ones that have smoother trends, right? Something in zone 1 for a long, something in zone 3 for a short. Let's go through to DAX. And DAX is got a support level here. It's very much like gold. You can see the EMA price is above the EMA, but that EMA is flat. We just want that EMA to turn up, give us a little bit of extra confidence there. We want the RSI to pop above 50 and move between 50 and 80. We're not getting that. There is very little momentum on DAX, very little momentum, and you can see we're stuck in zone 2. So you can see the differences between charts that have a bias to them to those that are a little bit more neutral. And I think that we want to approach the charts that have bias and try and exploit that bias, because the neutral, well, there's that lack of momentum. I think that's as far as we'll go for this morning. If there's any questions, just go ahead and type those in. Just go ahead and type those in. And the idea here, just to reiterate, this is a 2-trigger system. We need the EMAs to trigger, we need the stochastic to trigger. But even if we get those triggers, it really then depends on the stochastic moving to the upper or the lower quintile and holding, because that's where the momentum swings come in. All right, no questions, so we will conclude at this point. I want to thank you guys for signing in. James, enjoy your day as well. Thank you very much. Have a good day ahead, guys. Good evening, and we shall chat tomorrow. Tomorrow we'll do an extra webinar. We shall do the crypto minute as well. Thanks very much, guys.